You should see Form W-4 up. Is that what you see?
Yeah, W-4 2019. Yes, sir.
You're in the right place, okay? And I'm gonna just kind of recap some today, and then I'm gonna take you to a place today to show you that everybody, no matter whether they're single, married, or whatever, needs econ, because you're gonna find people that say based on their income, they may not need my econ. So let's talk today. So let's get the recording started. Are we recording?
Yes, sir. Recording started.
All right. Good morning again. Good afternoon, whatever it is, or wherever you are. It is 12 noon here, a little after 12 here in Atlanta metropolitan and Eagles Nest here on April the 26th. And so, ladies and gentlemen, thank you for being on the call with us. A lot of things going on. There are many, many people that should be on this call, but they have elected to do other things. So for those of you that have elected to be on here with us, let me just run through a kind of a recap on what we talked about on the W-4, because this is a cornerstone of who we are and what we do here at MyEcon. So I want to make sure that everybody is on board with this amount of the information. And if you can't do this, it's kind of as a cornerstone. Now, when you talk W-4, most of us, when we look at our W-4s, we were given this when we were employed on a job, whatever job you were on. Now, if you are a person that does not have a job, you still need this training, because as you build your team, one of the most important things you want to do is teach your team how this works so you can preserve your team. This will preserve your team in business with you forever. I have people who've been in business with me 25, 30 years. This is Form W-4, Department of Treasury, Internal Revenue Service. You will get a form like this when you fill out your hiring package. Or if you do it all online, you may fill out a complete form online. Now, this basic information go up here, and line 5 says the number of withholding allowances you are claiming, and tell you to fill out the worksheet. Well, most people never fill out a worksheet. When I did it, I never filled out a worksheet. What I did is what many, many people do is the lady told me, she said, "Are you married?" I said, "Yes." "Do your wife work?" "Yes." "How many children you have?" "2." So on my line 5, I put 2 for me, and my wife put 2 on her. Every year we got a tax refund, every year. And we use that money for various things. I won't get into the details of that again today, but here's what happened. Line 7 says, I claim exempt from withholdings from 2019, and I certify that I meet both of the following criteria. To claim exempt, that means they don't take anything out of your check. To claim exempt, I got to meet both of these criteria. Last year, 2018, I had a right to a full refund of all federal income taxes withheld because I had no tax liability. This year, 2019, I expect a full refund of all income taxes because I expect to have no tax liability. My example is this. I am using a couple who earn between $75,000 and $100,000 a year. So in that range of example, approximately 15% of your money is going to go out for federal income taxes. So if a person had $10,000 taken out of their check for federal income taxes, if they get all $10,000 back as a refund, they owe no taxes. However, if they get $3,000 back, they paid $7,000 in taxes. Many times people think they paid no taxes because they got a refund. No, you paid taxes if you didn't get all of it back. How do you determine that? You have something that you got at the beginning of this year called a W-2. Those of you that have a job, you got your W-2 at the beginning of 2019 for 2018. It will tell you how much federal taxes was taken out. It will tell you how much state taxes was taken out. It'll tell you all of that information. So now once you know how much taxes was taken out, you then determine how much you got back. That is the determinant that you pay taxes or not. If nothing came out and you paid nothing at the end of the year, you pay no taxes. That's the way it works. Now, moving on really quickly, everybody needs to understand this is the government's form. This is not MyEcon's form. purpose. Complete this form every year so your employer can withhold the correct federal income taxes from your pay. Consider completing a new form every year or whenever your financial situation changes. It changes when you have a baby. It changes when you get married. It changes when you change jobs. It changes if you get a business. It changes if you get a divorce. Many things can change your financial situation. Note, if you have too much taxes withheld, you'll receive a refund when you file your tax return. You had too much taken out. If you have too little withheld, you owe taxes when you file your tax return. C, line C, head of household. Generally, you can claim head of household status on your return only if you're unmarried and pay more than 50% of the cost of keeping up a home for yourself and a qualified individual. That's a dependent child living with you. Child tax credit. When you file your tax return, you may be eligible to claim a child tax credit for each of the eligible children who qualify. To qualify, the child must be under age 17 as of December 31st, must be a dependent who live with you for more than half of the year. Credit for other dependents. When you file your tax return, you may be eligible to claim a credit for other dependents for whom the child tax credit cannot be claimed, such as a qualified child who does not meet the age of Social Security number requirement. They're over 17. Now, ladies and gentlemen, I'm going to request, even though David is recording this, that you get paper and pen and pencil to take some notes. You're going to need 3 or 4 sheets of paper because I want you to write some stuff down. See, I want you to learn this and apply this to your life. If you learn this and apply it to your life, this will change your life forever. I want to give you an example of something. Think about the stuff you learned in school when you were, and I'm talking about now high school. You're still using that stuff in your life. Those of you that went to college, you may have learned some things in college that you are still using in your life today. This is like going back to school, getting a financial literacy degree. You're going to use this stuff in your life for the rest of your life. You're never going to not use it. So let's go today. I'm going to take you through 3 examples today. Example 1 is a single person. That means someone who does not have any children living with them. That may be they are 22, 23 years old, working somewhere, making, $36,000 a year, or it may be a 50-plus-year-old person who all of their children are gone, they have no spouse, and so they're single. So we're going to talk about why would a single person with no children need to file or need My Econ as a business, okay? Now, so you see this, they have all zeros because they have no children. It's all zero. For those of you that have not been with us, we're going to, the way we do taxes here, it says you're supposed to have your pay stub, but the way we do it is we do not have a pay stub. So I just assume 10% taxes coming out for federal. You have state taxes, Social Security, Medicare taxes. So 36,000 times 10% is 3,600. I divide the 3,600 by 24 payments. That's $150 per payment. Times the number of pay periods. So let's count the pay periods. 2 in January. First and 15th is 2 in January, 2 in February, 2 in March, and 2 in April. That's 8 pay periods. So we're going to multiply 150 times 8 to get the total amount of taxes taken out to date. So we're going to say this person, and we're going to show you what it looks like if they don't do this. We went over the Schedule C deductions yesterday and on Wednesday, how you get them. We're going to say this person has $20,000 worth of Schedule C business expenses that they are filing on their deductions, on their taxes. As a single person, the standard deduction is $12,200. That's all it is, $12,200, no matter how much money you make. So if the single person, they're making 36 in this case, if they don't have a business, all they can take is $12,200. If they were making six figures and they're single, all they can take is $12,200 unless they happen to own a home. And now they can take what people like to call the long form or itemized. So in this example, we're going to use standard deduction. So if you wrote this down, what you should have written down now, single, no children, one income, $36,000 a year, taxes is $150 per pay period. That's $300 a month. We got 4 months, so we got 8 pay periods, and we got a $20,000 adjustment and standard deduction of $12,200. That's the single person. I want to go to what's called head of household. As a head of household, that is a single person with a child, one or more children living with them. This person has 2 children, 10 and 13. This person makes $60,000 a year. They're going to have the 2 children. We're going to do taxes the same way. 60,000 times 10% is 6,000 divided by 24 payments. That's 250 per pay period. 8 pay periods times 250. We're going to just give them a startup. Yesterday, I talked about this with someone asked this question. This is a new person, just got with us, and we started them out with $4,200 as a startup MyEcon person. We don't give them $50,000 of tax deductions because we don't know what they're going to do. We can adjust that along the way, but we're going to start them with just $4,200. Then we're going to do $18,300 as the standard deduction for them. This is a head of household, 2 children, $60,000, and they're going to have $250 per pay period, twice a month, $500 coming out of their check to have $6,000 a year. The adjustment is going to be $4,200, and the standard deduction is $18,350. One more. We're going to do all these today. We're going to have a great day here in the next 45 minutes. Okay? All right. Married, filing jointly. This couple has 2 children, 13 and 18. Remember, if they're over 17, that's a cutoff. That's why I make sure you know what age they are. We have 2 incomes, 60 and 40. We do the taxes the same way, but when we do 40 times 10%, that's $4,000 divided by 24, that's 166. We round it down to 160. In this example, we're going to do itemized filing. We're going to do itemized filing, a Schedule A filing of $1,700 for medical expense, $1,750, I'm sorry, $4,750 for taxes paid on property. Interest on the property is $11,000. And charitable donations is $10,000. Now you'll see up here, I have $20,000 in business expense. I'm going to modify that because what we did on Wednesday is we showed you how to come up with $52,000 of business expenses. So I'm going to modify that based upon that example of the $52,000. So these are the things that I need you to write down. I need you to write this down so when we come to this, you can have this. Now, I'm going to remember it because I do it all the time. Ladies and gentlemen, it seems like, and I want you to understand something. I know it seems like I'm just a super expert at this, and I am. But also, the reason I'm an expert at it is I do it all the time. I do the same thing over and over and over. However, I've been doing finances for 30 years. And I've learned the easy way to help you understand this. So there are a lot of things I'm not an expert at. I call people if my heating and air go out. If I'm sick, I call someone to help me with that. So it's reasonable that since we have never been taught finances, we need to call someone to help us with finances. So now what we're going to do is we're going to go to the W-4 form. Now let me make sure I can swing this baby right. And we're going to, bam. What we got, Damon? You see the IRS.gov? All right, I think someone just said.
Yes.
Y'all see the IRS.gov, right?
Yes.
All right, man, I'm getting good at this. I'm getting good. I understand I'm not that great at this. Thank you. I'm not that great, but I think I've learned finally how this system is working here. And, you know, I want to at least be intelligent enough to follow along. All I did here, ladies and gentlemen, just for the purpose of class, I opened it up earlier. But all you do is go to irs.gov, irs.gov, and you pull this website up. This is the IRS website. This is not my income website. This is who we all file taxes to. Forms and instructions is what we're going to click on. Now we're going to come down to W-4 withholding calculator. I mentioned this on the other calls. I mentioned it now. If you want a hard copy of that W-4 form you saw me go over, if you click right here on the form W-4, you can print that out. You can actually, it's fillable. You can fill it online, print it out, and take it into your HR department. However, we're going to use the W-4 calculator. So we're going to use the W-4 calculator, and right here it tells you the IRS encourages everyone to use the withholding calculator to perform a quick paycheck checkup. Even more important since the change in 2018. The calculator helps you identify tax withholding to make sure you have the right amount of taxes withheld from your paycheck. There's several reasons. Checking your withholding can help protect against having too little withheld and facing an unexpected tax bill or penalty at tax time next year. At the same time, with the average refund topping $2,800, you may prefer to have less taxes withheld upfront and receive more in your paycheck. We come down, we click on plan ahead first. Gather your most recent pay stub. So if you are doing this for yourself or one of your team members, they need to have their pay stub and they need to have their 2018 taxes on hand. Now, I understand some people filed extensions on 2018. So tell them to bring it to 2017 if they're on the same job that they've had since 2017. We can get some basic information off that for that. Need to have those things. Now you can read the rest of this. I won't read it in the interest of time. We got to get going. Withholding calculator. All right. So we're going to start with a single person. No one else can claim this single person, and we're going to continue. They have one job. They do not have any of these tax deferred. We went through all this yesterday. We won't go through it now. No dependents. We just come right on down. No tax credit. They ain't got none of this stuff. They're just a single individual. We come over here and we put in their income, $36,000. They have no bonuses. Taxes withheld from their check. Okay, it says earn the third income tax withheld from their check. They had $150 times 8 periods. So what you want to do is you want to look at this. You want to go to 150, use your calculator, times 8. I know the answers. I don't want to get you used to doing this. It's $1,200. So you get used to doing this. What they withheld from the last pay period, since they do 150 per pay period, we know they withheld 150. They get paid twice per month. And they had January, going to have it in December. This time we're not going to put any adjustments in here. We're just going to put continue. They have $12,200 in tax deduction on the standard deduction, and we're going to continue. Now look how simple this was. Here is a person. I need you to follow along with me carefully on this. Here is my single person, and I need you to write this down. My single person, right up here, here's the numbers, 2019. Based on the information you previously entered, Your anticipated tax for 2000, the single person taxes is $2,665. Now remember, they only made $36,000. If you do not change your tax return, you're going to have $3,750 taken out for 2019, resulting in an overpayment of $1,000.85. They get that back. So it says to them, do they have to do this now? We are 4 months in, going to our 5th month. You need to change your W-4 on line 5. Line 5 of your W-4. You need to change that to 3 withholding allowances. So what this person should do if they're not going to have a business, they should still go into their HR department right now, fill out a new W-4, and turn it in with 3. Now, watch this. That's how much taxes they owe now. This is the taxes, and the refund is $1,085. I want you to write that down because we're going to come back to that. Let's now go and let's give them a business. So let's take this same single person that no one can claim. Continue. They have none of these things. They got one job. None of these things apply to them. They have no children. Continue. Now they have a $36,000 a year job. Excuse me. Taxes withheld to date was $1,200. Taxes withheld on the last paycheck was $150. They get paid twice a month, January and December. Now, on adjustments to income, what that is, for anybody that wasn't with us on yesterday, we look at all of the business expenses you can take. Things like driving your car back and forth to work, things like eating out, things like travel, things like cell phone. We look at all of those things, and whatever those expenses come up to be, then we have to subtract out how much income you made. So let's say that this person made $5,000 in my econ, and they had $25,000 in business expenses. So they would fill out, the tax preparer would fill out something called a Schedule C. On the Schedule C, they put $5,000 in income that they actually made in my econ, and then they would put $25,000 in business expenses on the Schedule C. Their net losses would be $20,000. So we're going to put here $20,000 on the net losses. We want to continue. Now we're going to say they still have the same $12,200, and we're going to continue. Now this time, look what happens. Their taxes went from owing $2665 to this time they owe $383 in taxes. $383. Now I need you to take this, your calculator. I'm doing it on mine. I want you to do it. 2665 minus 383 equal. They're going to get $2,282 in tax savings. It will cost them less than $500 a year to be in my econ. Ladies and gentlemen, that's a net profit of over $1,700 just on that one move. Their refund goes up from $1,085 to it goes up to $3,367. Now, what we want to do with them is we want to adjust this W-4. Now, watch what happens. Take the W-4 on line 5, fill out a W-4, and put 8 on line 5 of the W-4. This time, now that 3367 divided by the number of months left is 8 months, divide that by 8 months, and this person will get a $420 increase per month. So now, can you see why a single person need this on $36,000? Now, in some areas, you may have single people making $100. It will be even bigger because the single person does not have a lot that they can get as deductions. They just single. They get $12,200. I hope everybody follow me on that. We're going to move on for time purposes. This time we're going to start over. We're going to do a head of household. That is a single person with a child. No one else can claim them. Continue. They have one job, no deferred compensation, have 2 dependents. That's what our person had. They're not 65, they're not blind. They do not have daycare. So this time they have child care, child tax credit of 2. Both children is under 17. And so now we don't put anything here. We come down here and continue. Now we're going to do the job of $60,000. No bonuses, taxes withheld. If you take 250 times 8, 250 times 8 payments, that's $2,000. And then they take out $250 per pay period. This is why I asked you to write this down earlier, because I can't show it all at the same time. Now we're going to do twice a month. We're not going to put in the My Econ business at $4,200 this time. We're just going to continue. We're going to leave it at $18,300. Continue. Now let's look at what our single person does with a head of household. Our single person head of household, they got a pretty good deal already. They have $724 in taxes due because they had children and they got earned income. But they're getting a refund of $5,526. That person goes to the HR department on line 5 and they put 14 on there. Now, some HR person that don't know no better gonna say, girl, you know you ain't got no 14 children. I know you. But it's not asking how many children, it's saying withholding allowance. So let's see if we make any difference with her by giving her $4,200. We're not gonna give her a lot, we're just gonna give her $4,200 starting out. Married, head of household, no one else can claim her, continue. One job, 2 dependents. And child tax credit, 2. And we're going to continue. 60,000. And we're going to continue. 2,000. And we got $250 per month. And we have twice a month. Now we are going to add $4,200 this time, just get started in My Econ. $4,200, and we're going to continue. Going to continue on the 18, and look what happened. It changed a little bit, but it is $500. It went down to $220 from $724. That's a $500 savings. Now it wasn't before the $200, but she got $500 more. Well, at the very least, ladies and gentlemen, now she might end up making more money in My Econ and doing the different things that she listened. But in this case, with 2 children, it saved her $500. It's worth being in My Econ because she got a $500. Her refund went up from $5,526 to $6,030. That is going to give her more money. So now she would change her W-4 right now on that $6,030. Divide that by 8 months. That would put in her pocket right now $753. So the reason she want to do My Econ is we're going to help her put $753 per month more in her pocket. She doesn't have to wait for a refund. She's going to get that now. And then at the end of the year, based on the information you enter, if you complete a new Form W-4 for 2019, the expected refund, which you may be entitled to, is still $2,025. I think, ladies and gentlemen, that's great news. I absolutely believe that that's great news. Now, I want you to flow with me on this because we're doing all this because David is recording this, and you're going to be able to look back at this and see how this works. Okay, I'm going to start over. We're going to do this time married, filing jointly. Married, filing jointly, no one else can claim you. Bam. We have 2 jobs. We're not going to do again. I want to put this out here so everybody know what is deferred, tax deferred here. Tax deferred, it tells you what tax deferred arrangements are. Things like tax shelter, IRAs, thrift saving plans, 401k, simples and all that are tax deferred. What is cafeteria plans? Cafeteria plans are very similar, but they are different in that we're talking about things like COBRA, we talk about health savings account, we talked about flexible spending arrangements, dependent care assistant plan. That's the things when you want to know what they are. Just click on the link and it'll tell you. The number of dependents. This person has 2 dependents. They are 13 and 18. Very important that you know this because here's why. When we come down here to child tax credit, 1 is over 17, so we can only claim 1 there. We can't claim both. But look what the calculator says. The calculator will also determine the non-child dependent credit for you based upon the total number of dependents and this number of qualifying children. So I already know you got 2, but 1 is going to be non-qualified, the other one, so you're going to get less for that, but you're going to get it. Continue. Over here on the job, we got 60,000 and we have 40,000. It doesn't matter who makes what. I'm not in there as the husband or the wife. It's just who makes one. One makes the other, one makes the next. It doesn't matter that. Not saying put the husband first or the wife first. What taxes did we have held? $2,000 here. I want you to remember we had 166, 67, but we round that down to 160 times 8 periods. That is 1280 that we have here. We took out 160 on this pay period, and we took out 250 on this one. They get paid twice a month. All of this you can find on a pay stub. The reason you need a pay stub is you can find all of this information on the pay stub. We're not going to put in any business expenses right now. We're going to continue. This time, we're going to put in, instead of the 24,400, we're going to put in itemized 1750. Remember that for medical, for property taxes 4750, for interest on a house 11,000, and for gifts to charity 10,000. So now we're going to put all of that in, and then we're going to click continue. Look at what happens to our married couple here. Our married couple owes $6,025 in taxes. They're going to get a refund of $42.25 because they owe taxes. Now, when they fill out their W-4s at work, the one that makes 60 should put 6 on there, and the one that makes 40 should put 4 on there. This is what the calculator says. So when you go to your HR department, if someone says you can't do it, ask them, have you ever looked at the W-4 calculator? Before they assess what you can't do, ask them, well, can we look at the calculator together? Can you pull the IRS calculator up? Let's go through it and see. Now, this is with no home-based business. Let's go down here now. Let's start over. Okay? Let's start over. Okay, with a home-based business. So they're married, filing jointly. Okay? No one can claim them. And so now we're going to continue. They have 2 jobs. They have 2 dependents. They're not 65 and older. They have 1 child tax credit, 1. And we're going to continue. Job with 60,000. Second job, we're at 40,000. How much tax has been withheld? 2,000. How much taxes been withheld? 1,280. The last time those taxes was taken out was 250. The last time taxes was taken out was 160. They both get paid twice a month. I don't know why that didn't do what it's supposed to do, but we'll come back and make sure it does. Twice a month. Now this time, okay, again, ladies and gentlemen, we recorded this on yesterday. You can go back and look at this. We spent a lot of time on this on Wednesday. We went through and showed you in the MyEcon training manual how to determine how you come up with business expenses. Now, we're going to assume that this couple is going to work our business. We're going to assume that this couple may be in the insurance business and work at that. So we're going to assume that this is a couple working at trying to earn a profit in business. So they make some money in business. Let me say something, ladies and gentlemen. You can make in business $50,000 to $60,000 a year and have $100,000 a year business expenses. And if you made 50 and you had $100,000 in business expense, you had a $50,000 loss. But in this example, we're going to say they had a $5,000 income, but they had a $52,000. I think we had a $52,380 expense. So we take $52,380. I'm going to subtract 5,000 because they had 5,000 income. So on their Schedule C, they had $47,380 of business losses. Now, again, if you're just getting on here today, you're a little confused right now. Go back and watch the one from yesterday, and we'll talk to you about this even more as time goes. So we're going to continue. This time we're going to still do itemized, 1,750. We're going to do 4,750. We're going to do 11,000. We're going to do 10,000. And we're going to continue. Now I need us to understand and look at this. Look what happened this time. The taxes they owe went from $6,025 to $333. $337, I'm sorry. So if I take $6,025 minus, they owe $337 now. They saved on their taxes $5,688. Their refund went from $4,225 to $9,913. $9,913. Now, if they go in and make adjustments to their W-4, which is what they're supposed to do on line 5, the one that makes 60 is supposed to put 12, and the one that makes 40 is supposed to put 7. If they do that, this $9,913 divided over the next 8 months will give them an increase of $1,239 per month. So this person will get a $1,239 $12.39 increase over the next 8 months. Now, ladies and gentlemen, help me understand why in each case, we showed a single person, we showed a head of household, and we showed a married couple. We showed $36,000 for the single person. Now, I know some of you out there make a lot more money than that. And I know many of you live in Los Angeles and surrounding areas, and you saying nobody can't live on $36,000. But I want to hip you to something. Millions of people around you every day are earning less than $36,000 and trying to figure out how to live. $36,000 is not a little. It's a good salary. A person that makes $36,000 a year would not qualify for any public assistance anywhere. So we didn't take the brokest person on the planet. We took a person that has what people call a decent job. Understanding that for $36,000 a year, that person making somewhere between $18 and $20 an hour. They're not making minimum wage. $60,000 for a head of household is a great salary. In America, the median income is $55,000 a year per household. So when someone makes 60, they are above the median income. And for our married couple, we did 6 figures together. Ladies and gentlemen, we chose what we believe, based on our experience, is people that are in the income ranges of what fits really good with my econ. And these are people who are trying to make a living for their families and trying to go to the next level. But you can see how much taxes they have to pay. We don't make the tax laws. We play by them and we play by the rules. We keep ourselves within the tax laws. You will see that everything we do, we point back to IRS regulations, because we're not trying to get you to go to jail and we ain't going with you, okay? So let's be clear. If you want to cheat and tell lies, I'm glad Damon is recording this, so no one can say, Alvin told me to put $50,000 down here. I didn't tell you that. I went through and took the time to show you how and what it takes to come up with $50,000 worth of business expenses. Not saying that you can't. We have people that do way more than 50 every year. But these people track their business expenses, and if they ever get audited, they can prove them. They work with a cash flow manager, which we showed you yesterday. Today, when we come back at 4 o'clock, we're going to show you the rest of that tool and how that tool can help you fix your life. Ladies and gentlemen, in each case here, we was able to help the person do income shifting. Now, Damon, and I only can refer to him because I don't know all of you all on here, so don't be offended that I don't call you out. People like to find ways to be offended by stuff. And, you have to look for that. You have to choose to say, "Well, be offended." I'm not trying to offend you. I met Damon and Ashley. And I know Anthony. However, Anthony didn't set this call up. Damon and Ashley set this call up. And I'm on here as a guest of theirs. Ladies and gentlemen, I happen to know that I met them, and many of you know this, that they own a financial service division. And in that financial service division, what they're trying to do is help you do basically the same thing that we call personal finance success. And that is build an income so that when you retire, you have money. But along the way, in the likelihood that you prematurely die, your family don't struggle there either. So in each of these 3 examples, we found money that they currently is going to taxes that could be repositioned to be shifted to investing and taking care of their family. Alvin Curry and MyEcon, the leaders here at MyEcon, we believe you ought to get you and your house straight, because if you don't take care of you, nobody will. It's not your job's responsibility to make sure you got a retirement. It's not your pastor's responsibility to make sure you got a retirement. It's not the president's job to make sure you got a retirement. It is your responsibility to make sure you have a retirement. So if you stick with this team, because this team and I, we're bonded. We're going to be in business together. I tell everybody this right here. I ain't never going to divorce you. I ain't never going to leave you. You got to try to leave me, but I ain't going to leave you. I'm locked down. I'm in lockstep with this team, which is to say, all of you on here, if you stick with us, you may not have it all today, but don't quit before you have time to get it. Don't go to college and the first week in college say, I just don't understand how I'm going to get no degree. I'm going to go on and quit. Now, you do know people do that. People quit their first few months in college. People quit their first few years in college because they can't understand sacrifice and learn and growing in their lives. But if you want to win, stick with this team. And there's no reason why anybody should say it's an expense to be with MyEcon, because MyEcon gonna give you more value than what it costs you to be with us. It'll cost you money not to be with us. You will lose money not being with us. It's definitely not an expense. Uncle Sam pay you to be with MyEcon and with Damon and Ashley in their businesses. Ladies and gentlemen, I want to thank you for this set. Now, we got some time for questions. We'll take questions. Before we go to the investment piece, let's get the questions out the way about this first, Damon, and then we'll go to the investment piece and answer, not the investment, the compensation. Then we'll talk about compensation for a minute. But let's talk about the W4, which is a cornerstone to MyEcon. I showed you 3 of them today. I go back to any one of the slides you want me to go back to and try to clear it up for you. Tell me your name, where you're calling from, and what's your question?
Hi, this is Mark from Los Angeles, Mr. Curry. I've got a question for you in regards to the standard deductions. So someone starts the business, a couple, I think it was 24,400 standard deductions, and let's say they didn't meet that. They didn't actually go beyond that, so they use standard deductions. Is that still going to help them in regards to getting money back? And because of the different way they're filing and they starting the business, will that still help them to get money back and save on taxes?
Okay, so if they can, okay, great question, Mark. Thank you. That was a great question, okay? Here's the deal. Okay, you got 2 things you file, standard or itemized. And most people, and President Trump has made this statement hundreds of times. He said most people are not going to itemize any longer. So I made it look like they can itemize. But unless a person owns a home, or buying a home, I should say, not even own, buying a home, and they have lots of interest on that home, most people deductions is not going to be Schedule A, it's going to be standard. So as a couple, standard deduction is $24,400. So if they made 6 figures, as we're showing in this example, they would have to pay taxes on $75,600. That's even more reason why they need our business, because they wouldn't have no other way of getting any other deductions. Now, I'm a big godly man, and I know a lot of people Damon have introduced me to are godly people too. And I hear a lot of people talking about, well, they're going to pray and they're going to do this and they're going to do that. I'm telling you, Jesus ain't going to fix that. The way Jesus fixed things is he sent Damon into your life, and he sent me into Damon's life, and through that, God answers prayers. God don't come down personally and do it. So when people are saying, how do I fix that? Yeah, keep praying. The answer came through a human being. So now we're going to show that couple how they get $40,000, $50,000, $60,000 of tax deductions and eliminate the need for paying paying taxes and keep that money in their household. The only way to do that is through a home-based business, though. There are no other ways. Does that answer your question?
I think it does. I might have just missed the beginning part. So just maybe you can just direct the answer to exactly what the question was. If they do a standard deduction, will they not benefit as opposed to itemized deduction?
Okay, if they do standard deduction, they will still benefit from having a home-based business. They will need more because remember, standard is less than itemized. So if they do standard deduction, they definitely need a home-based business. Yes.
Okay, I see. So I guess what I was confused about was as soon as you become a MyEcon distributor and you start a home-based business, you are now entitled to itemized deductions. But what I'm confused about.
No. That's why you're confused. Itemized deductions are what's called Schedule A. You get those if you own a house, if you have medical expense, if you pay tithes and offerings or give to charity. Those are expenses anybody can get that fits that category. So those are Schedule A deductions. Now, when you get in business deductions are what's called Schedule C. Those are different. Everybody that get in business can get a Schedule C deduction for being a part of MyEcon. But if you do not get in MyEcon, yet you own a home, and you got property taxes, you got interest on that house, you got maybe tithes and offerings you give to church or you give to the Red Cross or some other nonprofit organization, you can deduct that. Those are deductible itemized expenses. You either file itemized or standard. Anybody can do that. When people get in business, now they add the Schedule C. That's where the business deductions come in on top of either standard or itemized. It's in addition to standard, in addition to itemized.
That answers my question perfectly. Thank you.
All right. Well, we're gonna get to it. We just need to keep talking till we get to it. That's good. And all right. Appreciate it. All right. Good thing. Next question.
Alvin, this is Jeff from LA. That was a great question. I'm trying to understand that myself now. I didn't know that. So a person already either gets a standard deduction or Schedule A itemized deductions of about $22,000 already. But on top of that, with MyEcon, they get Schedule C deductions as well.
Yes. Schedule C deductions are business expenses. Remember, Jeff, I think you've been on with me all the way through. Remember when we went through and got those Schedule C deductions for driving the car back and forth to work, for paying the children, for using the cell phone? We turn ordinary everyday expenses into business expenses. They go on a Schedule C. Now, those are in addition to whatever else deduction you get as a standard filer. Mm-hmm.
So that family, if they had $20,000 of Schedule A deductions from interest payments and mortgage and all that, plus they had another $50,000 of Schedule C business deductions, their total deductions would be $70,000.
Okay, now let me help you with something. Okay, if they only had $20,000 of Schedule A, it would be more beneficial to take the standard because the standard is $24,400. You want to take the larger of the two. Anytime that they filing, you got standard or itemized. So let's take standard as a married couple is $24,400. So unless they got over that, they would always take standard. If they had $20,000 of itemized, their preparer would tell them to take standard. But if they had $30,000, so let's just say they had $30,000 of itemized, and now they got $30,000 of itemized, that's Schedule A. Then they go in and get MyEcon $50,000 of business expense. That's 80,000 of total deduction. So from 100, they would have 20,000 left over that would be taxable.
Okay, last question is for the dependents. They had two children, two dependents, and then a qualifying child. Is that part of the two, or is that two dependents and then separately a third qualifying child?
Okay, no, it's two. Remember, a qualifying child have to be under 17 by December the 31st. So in my example, I showed one at 13 and one at 18. So that showed that they do have two dependents. But when it comes to child tax credit, because one was over 17, we can only claim one down there. So it's one out of that's for child tax credit. Those are different things. There still is a dependent, but now you get what's called a child tax credit because you have children under the age of actually 23 if they're still in college, 18 if they drop out after high school, but it's 23 if they're still in college. Mm-hmm.
Okay, thanks.
You're quite welcome. Any other questions? Let me say this while you're thinking right quick. Here's what my objective is, and here's what my econ's objective. My objective is one and the same. I'm not trying to make you a tax preparer. If you want to be one, that's fine. That's not what I'm trying to make you. Here's what I'm trying to help you understand. What business expenses can be turned in, what everyday life expenses can be turned into business expenses and can be written off on your Schedule C. I'm trying to help you find everyday ordinary life expenses that you can turn into Schedule C business expenses, therefore lowering your taxes. Many times you've heard this in the media that corporations have what's called loopholes. Well, a loophole is really a tax deduction that's given to a person being in business. So if I were to take President Trump, he gets the same 58 cents a mile if he has and I know he have a business, but for his business cars on the road, they only get 58 cents a mile. If I were to take Comcast Cable, they got trucks running on the road. They can either write off the totality of the truck's expenses or they can write off 58 cents a mile. Because remember, when we went through it, we said you can write off actual expenses or 58 cents a mile. No one gets more. So we got the same deduction that big corporations have. Big corporation can buy all of their employees' cell phone and write the totality of the bill off. When you're in business, you can hire your children and wife, and you can write off all of your cell phones, the same as big business. All I'm trying to get you to understand here, ladies and gentlemen, is that the same things that big corporations are doing. It didn't say these are big corporations or small corporations. It said if you have a business, you can write these things off. And that's what we're trying to do, is give you 6 or 7 things that you can prepare for. And as you grow, we'll give you more and more things you can use that you can write off. See, we didn't get into how you deduct your home, how you deduct your health care, and some of those things. Some of those things are, $60,000 to $70,000 by themselves. We'll get into those a little bit later. I didn't want to take you too far too fast. Any questions?
I hope this is pertinent to what the information you just gave us. If not, you can go into this answer later or at another time. But a lot of people are baby boomers, and they are retired. They're receiving income from their 401k and also Social Security. Would it be to their advantage to start an econ business even later on, even when they're not a W-2 employee, in order to help deal with the taxes that they're going to pay on their 401k distribution and their Social Security income?
You're absolutely correct. Now, it does have everything to do with this, and we hire a lot of baby boomers in here. And in fact, I'm a baby boomer myself, kind of right on the center of the baby boomers generation. And my mother bore 10 children during the baby boomers generation. All 10 of us were born during that time. And I'm kind of in the middle of that group. My oldest sister is deep into it. I'm kind of in the middle. And then my baby sister is kind of end of the baby boomers generation. Here's the thing. When you look at the jobs, it tell you if you have a taxable pension, that's considered a job. So you need to make adjustments to that. So as a retiree with a pension, whether it's an annuity or a pension from a job, 401k, whatever, they have what's called a W-4P. W-4P is for pension. It's the exact same questions as the W-4. The only difference is you go through and use this calculator to determine what go on there. But when you file yours with the human resource of whoever manages your pension, you would use a W-4P pension. That's what it means. If it's an annuity or a pension. For people who are working on a job, they just file the regular W-4. But everyone would use the calculator to determine that. So now, if anyone is paying taxes, a home-based business would help them pay less because they would incur business expenses. And the more business expenses you incur, the less taxes you'll pay.
Okay, that's a very significant statement. I think you just were very clear, but do you realize that people are desperate to lower their taxes liability on their 401k distributions, and what you're telling us is starting a home-based business is going to help that. Am I correct?
The only way you're going to help it is by starting a home-based business. I'm telling you that. The only way, because they have to get more tax deductions to lower how much taxes they pay. See, we don't scam the government. We ain't trying to cheat them. We're saying we're going to legally get these tax deductions and we're going to claim them. And on Wednesday, we went through how to legally get them. On yesterday, Thursday, we went through how to keep good records to prove them. That's why we did this in 3 different sets, because it's so much information, it's too much to give out in one set. You get information overload if I try to do it all in one setting.
Thank you.
All right, welcome. All right, really quickly, any other questions on the W-4 before we answer a couple of questions on the commission? All right, Damon. If you can stop the recording, if you have not already stopped it.
So Damon had to step out. This is Adam from Dallas. How you doing, Alvin?
Who managed the recording?
Damon is actually managing the recording. Let me check.
Okay, let me do something other. I don't know if you want to put all, I just didn't want to put it all in the same thing, just in case he had, different, you got different people doing different things. And so that's why I don't want to put it all in the same box.
Yeah, Damon said that he's having technical difficulties in his neighborhood right now. And as soon as he gets back online, then he'll turn it off.
Okay. So let me ask this, okay? Someone had questions about the compensation. Go ahead and ask me your questions about the compensation, and I will go ahead and answer them for you.
Okay, this is Larry in Michigan.
Okay.
And I thank you very much. You were absolutely right. My first time in this Eagle's Nest was the day you started, about 15 minutes before you started the presentation, and I was on